All right, traders, listen up. This is very important. I need you to, right now, close down every other window you have open. And I need you to do these 4 things in this order. All right, number 1, number 2, then number 3, and of course, number 4. Oh, yeah. Dude, that song was so ahead of its time. If you guys don't remember or you're too young, I'm going to link that below. But today is the day, traders. We are unlocking another piece of the algorithm. Is it too soon to do this? Probably, but I said we would last week, and so here we are. Here's the algorithm as it sits before today. We have the ATR, the most important indicator in the world. We have our confirmation indicator, which is the anchor. It is the linchpin for everything you do when it comes to entering a trade. And then we also spoke about exit indicators. A good one will save you tons and tons of pips down the road. Add in, now and forever, a volume indicator. You are going to need one. Why is it number 5 and not 2 or 4? I don't know. This is just the order I put it in at the beginning. Means nothing, but there is another piece. It was pretty much the worst kept secret out there. I've alluded to this a couple times already. People have guessed at it, and some of you have guessed right. I don't think you're going to guess 2 or 4, just a hunch. You can sit there and guess it on the comment section or on Twitter or email me. I am not going to tell you if you are right or wrong. We're going to keep those secret for a while. But in this video, we are going to explain the importance of volume for people who want to trade the way we do. If you are testing out confirmation indicators and you are forward testing it even and putting it into play, and you are taking more losses than you expected to, there could be a reason for that. We will talk about it. Also, just talk about what a volume indicator does for us overall. It is a big piece of this puzzle, traders. This video is going to be a bit heavy, so get ready. We're going to go over a lot. And then I'm going to tell you how to test these indicators out. There's a certain way to do it. It is not hard. It's probably easier than testing out a confirmation indicator, but we need to talk about that a bit. And then what do we do when the volume's not there? We need a game plan because the volume's not always going to be there. Sometimes it's not there for a while. What's your move? What do you do? Now, as is always the case, I know there are a handful of you who are finding this channel for the first time, and this is the first video you are watching. You have gone too far, and it is not fair to you to watch this video when you don't have any context or any background over how we trade. So if you do have the patience, and if you have the patience, you are probably meant for this. I need you to understand that this video is for people that have pretty much watched all of my content up until now. And what you need to do is go to the beginner's video. If you just click on my channel, it should be one of the first videos that pop up. It's really comprehensive and it shows you how to best navigate the section and how to get caught up in a hurry. There's an easy way to do that. Or you can just go to nononsenseforex.com, which is our pretty much home base for everything we do. And on the homepage, it will guide you as well. But please do that first. If it was your first day of high school, you would not immediately jump into a senior class and sit down and expect to learn a lot. That would not be fair to you. You wouldn't learn much. So do that first. Come back here. This video is not going anywhere, but you owe it to yourself to get caught up. Very important. But for the rest of you, let's talk about a volume indicator. Volume is our oxygen. Without it, we can't trade. We are trend traders. We need volume. Volume is what makes price trend. It is what plants crave. Without volume, our oxygen is cut off, and we really can't do anything. The problem is many trend traders try to trade anyway without paying attention to volume, and they wonder why they take as many losses as they do. I want to make this very clear for you traders. Let's go over it again. We are trend traders, and volume is what makes markets trend. When volume is not there, we take losses. You cannot ignore volume. Here's the punchline, though. We don't have to take those losses if we don't want to. If we have a really good volume indicator that is telling us, hey, the volume's there, or hey, the volume is not, we can eliminate most of those losses, and that is gigantic to our bottom line. Now, in our heads, that doesn't sound as sexy as something that gives us more wins. But understand, less losses is more money. Just like more wins is more money, less losses is exactly the same thing. And that's really exciting. Remember the elimination video? I actually showed you on a table how this works. We are going to view it again in this video here. But the point of that was, look, nobody's talking about this. Everybody wants to do things that gives you like 1 or 2 extra wins per 20 trades, for example. If I can give you something that eliminates 3 or 4 losses for every 20 trades, you have taken a huge jump in your success and in your bottom line. And as is often the case with a lot of things I talk about, very few people are talking about this. They're not focusing on this, and they absolutely should. Because a good volume indicator can take a lot of those losing trades away, and taking away a losing trade is every bit as important as adding on a winning trade when it all averages out. It's so important that if you go back to our algorithm, this is what gets you into a trend. This right here helps eliminate losses that indicator gives you. So does this, and so does this. It is that important. So important that half of my entire algorithm is dedicated to cutting down my losses. Please tell me this makes sense to you. I hope you understand how impactful this is, and if you don't, I will still show you a visual towards the end of this video. But I got asked this a couple weeks ago. Somebody said, what are the 3 keys to your success trading? It was a pretty basic question, but it was a pretty easy answer for me. I said money management, emotional control, cutting down my losses. That's it. Because when it comes to your bottom line, when it comes to my bottom line, we win when we don't lose. Now, does that sound kind of rudimentary, kind of stupid? Well, that's fine, but you're going to understand exactly what I mean soon. But I meant exactly what I said there. We win when we don't lose. So, on to talking about the indicator itself. You're going to be out there looking for a volume indicator. What do you want it to do? Well, this should actually say what a good volume indicator does, but it just didn't fit. But it's pretty easy. You want this volume indicator, whatever you find, to tell you when there is enough volume to trade. You want it to tell you, hey, price has a really good chance of trending because the volume's there, and the volume indicator, give you the green light to go ahead and trade. And then conversely, you also want it to tell you, hey, volume's just not there right now. I know you see this great trade setup, but there's just no gas in the tank right now. There is no wind to blow the sailboat, so you should probably pass because this is more than often going to be a loss for you. Pretty simple, and a good volume indicator can do both of those things. And ultimately, this is tough. You want it to lag as little as possible. All right, most indicators are lagging indicators. We just have to deal with that. But some of these are so slow, in particular the one I'm actually going to use in the examples here. You've heard me talk about it before. But you really want it to tell you that the volume is going to be there as soon as it possibly can. Because sometimes volume can come really quick and really fast. And you're never going to catch it at the perfect time, but you want to catch it as soon as possible. And so just remember that while you're searching for these. You want something that doesn't take forever to give you the green light to make that trade. But when the volume is not there and your indicator is telling you that, do not trade. There's no reason to. I don't care what the rest of your indicator is telling you. This is your green light, red light. If volume is not there, you are probably going to lose this trade as a trend trader. And that is exactly what we are trying to avoid. Ultimately, with these trade entries, we are trying to put the odds in our favor. All right? It's not like going to Vegas and playing roulette, where no matter what you do, the odds will always be against you. That is really bad for your bottom line. But we get to actually put the odds in our favor here if we want to. That's the most beautiful part about trading this way. That is what our algorithm is designed to do. Instead of playing a game where the house is supposed to win, we play a game to where we're supposed to win. I say it at the very top of my website, traders, this game is beatable. you can put the odds in your favor every time by having a really good algorithm. You just have to remember that the odds are against us. We just simply don't play. We only play when we're supposed to win. As much as we may not want to, as much as we might really love to play an exciting game like roulette, we know that our bottom line depends on us being smart and only playing games that we are supposed to win, only taking trades that we are supposed to win. And if you have tested out your system, your algorithm, and you have shown that over time it is supposed to win a lot more than it loses, well, now you have the confidence to go forward with every single trade you make. You just have to make sure you don't get excited and do something dumb like take a trade you're not supposed to. And a volume indicator is wonderful at telling us right away whether it's okay to trade or not okay to trade. It's so good that I'll go ahead and go to my charts right now and plug in a really bad volume indicator and show you that even a bad one eliminates losses all the time, and how the difference between having one and not having one is night and day. And here we are. It is the Euro Dollar daily chart, the one I show the most. And we have the rate of change indicator, which is another indicator that I use for examples. I don't like it, I don't endorse it, but it's a good, clean zero-cross indicator that fails just enough for me to show you some really good examples here. I've listened to some of your feedback. I know some of you were saying that these charts can be a bit hard to see. I'm not going to be able to zoom in and do stuff like that. You're probably going to have to do that on your end if you need to, but I did change from bars to candles, and we're going to do that from now on to hopefully make things a little more visible for you. So, the rate of change is a zero-cross indicator, meaning when this line officially crosses the zero and the candle closes and it ends up above the zero line for the first time, that is a long entry. And then when it crosses downward the same way, it's a short entry. So if I put the ATR up right now and then also put up this volume indicator, it's going to be a pretty busy chart, which is fine, but it's going to be even harder to see. So I'm not going to put the ATR up. So we won't really know if these are complete wins or losses by the way we trade. But I do know this. Anytime this thing comes down and then comes right back up, that was an absolute loss. So anytime we see these like here and here and here and then here and here, we pretty much know those were losses. Now, if that doesn't make sense to you, it's because we got this long signal right here, and then we immediately got a short signal from our confirmation indicator either the next day or the day after that. And so if you are in a long and your own confirmation indicator is now giving you a short, that's a pretty obvious sign to exit and start going the other way. For those of you who don't currently have an exit indicator now, you can just use your confirmation indicator. If your confirmation indicator is giving you an opposite signal than the direction you're heading, that's a sure sign to get out. So let's count these obvious losses here. You could probably count that one. There's 1, 2, 3, 4. That is 1. That's 5. That's 2, actually. That's 5 and 6. A bad short and then a bad long. That's 2 losses right back to back like that. So what did I say? 6 and then 7 and 8. So 8 losses within about a 5-6 month span just on one currency pair. That's quite a bit. You don't want that many losses, do you? This indicator did get you into some pretty nice trends, but if you took 8 losses in that time, you probably didn't make any money overall. So let's just see. Let's do this. Let's put the absolute shittiest volume indicator I know, the ADX, the Average Directional Movement Index, up on our chart. This was part of the Dirty Dozen. This is how much I dislike this indicator. Let's just put something that totally sucks ass on our chart, and let's see how many losses even a terrible volume indicator can remove. So if we just put the ADX up on its own, it should be a total mess. It is. So this blue line is all we care about. This blue line tells us how much volume is there. If it's high, it's a lot of volume. If it's a low, it's not that much volume. We want to get rid of this down here. This is a bullish-bearish signal indicator and also does not do a very good job. We just want to know about the volume. So we are going to adjust this here. And the colors of these two, can I just make them none? Yeah. If you do that, that is how you make lines disappear. And then we need to make a level. So if volume is over a certain level, we trade. If it is below it, we don't. Let's just go something like 25. Do that, and let's see how that looks. Much, much better. Okay, so that is what we want. If volume is above this line, it is okay to trade. If it is below, it is not okay to trade. So let's pull up the crosshair and check out these losses. So all you do is you pan over your losses and you say, okay, did my volume indicator tell me it was okay to trade when I lost this trade? So on loss number 1, yes. Loss number 2, you see the blue line's below that 25 line now. So this trade would have never happened. This loss would have never taken place because you knew that your volume indicator was telling you not to, so you wouldn't have. So you can just eliminate that loss from your bottom line, which is great. That's that many more pips in your pocket. We win by not losing. Same thing here. Volume was way down here. This is telling, screaming at you, do not trade. And if you listen to it, you wouldn't have taken that loss either. So that's already 2 losses eliminated. This one here, again, would never have taken it. This one over here, you would have actually lost both times here, but that's fine. Now, we've already eliminated 3 losses from this thing. This is really, really great. And then these losses over here, I could tell you right now, you would never have taken because your volume indicator told you not to. So 8 losses, try 3. Take all the pips you lost on all 5 of those losses and put them right back into your pocket like they never happened. That is what even a bad volume indicator can do. Now, I'm not stupid. I also know that this volume indicator in particular, probably because it's not very good, ended up making it so I didn't get to participate in the wins either. There's quite a few trend trades that would have been really good that I would have never taken in this case because the ADX told me not to. So let's pull the crosshair back up. Let's see. This one here, depending on where the rate of change told us to enter, so I'm going to say right about here. Yeah, the ADX was below the 25 line, so I would have never taken that trade and would have never gotten all of that. Again, over here, if I had the fortitude to take a loss there and immediately start going long, this might not have been a great trade because I would have entered right here. And depending on where my stop loss was, I took quite a bit of drawdown right there. But let's just say for the sake of argument that this was a good trade, I would have missed out on it. I would have not gotten all of that, or even some of that. Because down here, the ADX was telling me not to. So the trick is to find a good volume indicator that will get you out of bad trades, but still allow you to keep the good ones. It's a shame it has to do both, or you guys could all just put the ADX up on your chart, eliminate a bunch of wins, and make a bunch of money all the time. But it's not that easy. When you're testing out, you want to test to see if it eliminated losses, but you also want to test and see if it didn't allow you to take part in the wins as well. All right? That's where the real back testing comes in. Make sure you see or listen to the podcast I did on back testing and read the blog. It'll show you how to do that the most optimally and the most efficiently. But if you do that with these volume indicators, you can really whittle it down to which ones are the best ones for you. And understand this, traders. I didn't make a slide on this, so just listen to me on this. You are, no matter how good of a volume indicator you have, every once in a while, it's going to prevent you from a really good trade. You just have to make peace with that. You have to understand that the losses it prevents you from is going to be way more significant than that one really nice trade to prevent you from getting into. You really need to understand the long game here. So let me show you an actual visual of that. I set up a spreadsheet. Again, it's just an example like everything else is, but I'll show you right in front of your eyes how this works and why it does wonders for your bottom line. Okay, so here's what I did. Let's just say you are a break-even trader right now, all right? And I gave you, out of 20 trades, kind of go down a little bit, is what you average per month, okay? Right about 20. And you have an equal amount of wins as you do losses, all right? I know these numbers are anything but what they're actually going to look like, but let's just say on average, your average win is about 100 pips and your average loss is about 100 pips. So if you go 10 and 10 for the month, you are a break-even trader. Now, some of you have already told me that you've put some of these principles in place and now you're actually winning traders. So this is going to be even more exciting for you. But let's just say for now, you are a break-even trader. No matter what you do, you end up with 0 at the end of every month and you average right about 20 trades. This is certainly nothing to be ashamed of because most people are losing traders. But let's improve on this, all right? So let's do something that gives you an extra win. Let's say you have discovered an indicator that for every 20 trades can tack on one more definite winning trade. Now, if you can do that, that's really good. That is an indicator worth having. So let's just say that one extra trade is a winner. And there you go. Oop, right there. 100 pips a month. That's a lot better than 0. And that, to go from 0 to 100, is a really big move. Like I said, if you find a tool or an indicator that helps you do that consistently and you know it does, by all means use it. Adding on wins is great. Problem though, most people only focus on adding on wins. What can I do to get more winning trades? They never think, what can I do to get less losing trades? Let's see what that does. So let's take this off. This trade never happened. And you're back to break even. So you went out, you watched this video, and you discovered a volume indicator that you like. You're certainly going to get something better than the ADX. And the ADX in the example I showed you, out of 8 losers, eliminated 5 of them. That's pretty crazy. It did eliminate us from way too many winners, so we don't like that. But let's just say on the conservative side that you find a volume indicator that does knock you out of one winning trade. So that trade never happened because it was a winner, but your volume indicator told you not to take it. But out of 10 losers, let's just say it eliminated 3 of them. All right, so let's get rid of that. That one never happened because the volume wasn't there, and neither did that one. There you go. Just by putting a volume indicator in place, extra $200 pips in your pocket every month. Multiply that by 12, 2,400 pips every month from 0 to 2,400 just by finding a fairly good volume indicator. That's all you had to do. And oh, by the way, the other pieces of my algorithm are also there to prevent losses. And rarely do those pieces ever prevent you from taking part in the wins. So let's just knock out a couple more of these. Because of the other piece of the algorithm, that one never happened, and that one didn't either. Now what? 400 pips of profit because we eliminated losses. We win by not losing. So if you're a one-lot trader, for example, lots are different depending on which currency pairs you trade. I know that, but let's just say it averages out to be about $10 a pip. 400 times 10 is 4,000. Multiply that by 12 months. That's $48,000. From 0 to $48,000 by eliminating losses. Not by going crazy and trying to find all these things to give you that one little extra win every month. No, just by eliminating the losses you would have taken otherwise, you can really do some damage. Oh, and we're not even done. I forgot about the exit indicator. So a lot of these losses now, because of your exit indicator, are not 100 pips. On a lot of these, you're going to get out of a losing trade much sooner than you would have. So let's just say on some of these, the losses would have been less. Now look at that. Every piece of this algorithm is significant because of what it does for you. Whether it's manage your trade or whether it is to eliminate losses that you would have normally taken. These are not exact numbers, and I know that. But you see the impact, don't you? Eliminating losses is the ultimate key to victory here. And it starts with a really good volume indicator. It is worth however long it takes you to find a good one. Put in the work on these things, traders, because things like this await you. And now I'm going to make this search even easier for you. This feels like a sales video, and if you act now, I'll add this on. So this is what I want you to do. Some of you guys already have a really good group of volume indicators that you've already been testing out. I've seen you guys do it. I've seen you guys mention it. For those of you that have one, this is what I want you to do. Find a good one, test it out, and make sure it's something you like. It's not just an idea you have floating around. Actually give it a spin. See if it actually has legs. If it does, I am going to respond to my own video and pin the comment up to the top. Go to that comment, hit reply, and show us what you got. Give your fellow traders a link to where they can go find this indicator for themselves. And that way, all of these links will be in one centralized place as opposed to scattered all about. And the only thing I ask on that is no paid indicators, please. My channel is not a platform for people to come in and sell shit. And if you go to episode 9 of my podcast, I explain how paid indicators are typically no better than free indicators. So only free ones, please. Put them in the reply section under the comment that I pin to the very top of the comments section. So your search just became a lot easier. You still need to be a pioneer and go out and find some of these yourself, but you're already going to have a group of them waiting for you in the comments section. How great is that? Oh, but that's not all. I got something else for you. Next Thursday's trading video is going to be an early holiday gift from me to you. It is a special volume tool that I use every single day. If you were on my email list a long time ago, for all 60 of you, you know what it is. But for the rest of you, you are going to see it for the first time. It is something I literally use every single day I trade. And it is not meant to replace a volume indicator. It is meant to be used in addition to a good volume indicator. So with this tool and a good volume indicator working side by side, your volume analysis is going to be on point. And that's important because knowing when to trade and when not to trade as a trend trader because of the volume that's there or is not there is ultimately going to determine how high your trading account goes, assuming all of the other pieces are in place as well. So in conclusion, trade confidently when you have volume. If that volume indicator is telling you to go, you go. You don't ask questions. You check your other indicators, and if they are all telling you the same thing, enter that trade. But you got to have volume. If you don't, you can't trade. Doesn't matter what your other indicators are saying. It doesn't matter how sweet of a setup you have. If the volume's not there, the chances of that trend continuing are very low. And then just keep adjusting. Just because you found one doesn't mean you officially found the Holy Grail. I always say the Holy Grail is always out there somewhere. Even if you think you found it, it's still out there. This is a never-ending search. This is a game you'll never completely master. You just got to keep improving over and over. Find a good one, but then do whatever you can. Tweak the settings, look for other ones. Get the best volume indicator you can find on the best settings you can find, and it will really take you places. So if you want to be a part of this, if you want to be around for that special tool I'm going to give you guys next week, you got to be subscribed. You got to hit that bell. Notification Squad is on top of things. They get these videos right away, and you need to as well. But in the meantime, you have a lot of work ahead of you, more than you had before. But keep searching and keep testing. Record your results. You're slowly now starting to see just what kinds of things can happen if you start doing these things the right way, and when you start putting them together the way I'm telling you to. As I said before, there are dozens of you already that have told me, not to mention the ones that haven't said anything, that have already flipped from negative to positive in your account. Just imagine what can happen down the line if you put all these pieces in place. Do whatever has to be done to get there, traders. Go get it.